Hi, this is Kerry Artag with Wicked Stocks, bringing you the daily Apple report for Monday, January 9th, 2023. Please click like if you would, if you haven't already, and subscribe. It helps us out a great deal in being found on YouTube. And if you would, please share the content with friends and colleagues. So what I'm showing you right now is I like to start big picture and work our way in. We did test long-term support last week. This week in the low 120s, has been in the low 120s, also in the mid 120s. For the day, this chart that you see in the weekly chart at 122.67 is on the daily chart today at 122.86. I'll show that in a moment, but we have essentially tested long-term support, and from here we can recover nicely. As I've been mentioning, this low 120 support, which has been an objective really since October, is no longer an objective, of course, because we've reached it. It's been fulfilled. And from here, we can actually rally into what is now a channel top in the low 170s. It's actually this channel top here, which I'll show in a moment on the daily chart. So if you're a long-term investor in Apple, that is the green light, so to speak. I've been mentioning how, in terms of being a long-term investor, that is still a good thing to buy into in the low 120s, because from here we can recover nicely into the 140s by the end of February or sooner, and into the 160s, 170s as we move into the second half of the year or so, is what I'm guessing. And if we were to close the week below 120, then in terms of being a long-term investor, if your time horizon is 5-10 years, fine. But if your investment horizon is 5 or 10 months, I would suggest liquidating a long position, your investment in Apple, if we were to close this week below 120, because then I would expect within a couple of months 102.73, and potentially over the following 3 to 5, 5 to 8 months as we move into the second half of the year, the low 70s. That would be a real possibility if we were to close below the significant 120 level at the end of the week. I don't even have that shown here because I'm still, as of Monday, deferring really to the daily charts. And let's take a look at those daily charts. Right here, primarily, we've got these convergent channel bottoms, a 2 to 3 month channel bottom today at 123.92, and a long-term 1-year channel bottom at 122.86, which I just showed on the weekly chart. This area, still good bottom picking territory, not only for the day, not only for the week, not only for the month of January, but even for the first quarter of this year and possibly into later year. Because from here, we can, over the next, as I said, over the next month or two, by the end of February, push into the 140s. And over the next 5 to 8 months, as we move into the second half of the year, perhaps the low 170s. There's plenty of precedent for these 3 to 5 month swings. This swing was a little longer. This was August. There's about a 5-month, 6-month drop. And so the same 5 to 8 months into the low 170s. So once again, the low 120s. Prime bottom picking territory, long investment opportunity for Apple as we move into later year. And as of last Friday, we did close above this 127.97 descending channel top. And with that in mind, we may see now price acceleration, or at very least, bullish continuation over the next 3 to 5 weeks. By the end of January, perhaps 143.11. This is a zone, 143.11 to 148.60. 143.11 is a new descending trend-defining 1/3 speed line that is based in part on last week's move low. It can contain monthly buying pressures when tested, and combined with 148.60, which is a classic channel top, may well snag buying pressures through the balance of the first quarter. And from here, we may fall back into the 120s again over the following month or two. And it would be a settlement above 148.60 that would tell me within 2 or 3 months we should reach 173.91. So that kind of covers the big picture. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. let's take a closer look at that 127.97 level. And you can see here that it is a 2-star support. I have an up pivot. In other words, after having tested long-term support last week in the lower 120s, it may well be our sort of green light for the 140s, as I said, by the end of January. On the way up today, 130.90, nothing more than the high of the low, has its own pivot point qualities. So if we push through 130.90, we can within the day reach 135.19, which I've bumped up to a 2-star resistance level again. So we, having closed above 127.97, I consider 135.19 a 3 to 5 day target that may well be realized today if we push or open above 130.90. 135.19, because of its close proximity to this former double bottom, October Nove at 134.37, can contain buying perhaps into later week. And from here, we may fall back to this channel top at 127.97 over the following 3 to 5 days. So this is our 3 to 5 day swing trade, as I was saying. The swing trade actually emerged last week when we were bottom picking this long-term support area, but now it's certainly be long above 127.97, and over the next few days 135.19 likely. So this is a meaningful swing trade here above 127.97, and if you're an aggressive swing trader, you could consider selling 135.19 for a swing trade, a 3 to 5 day fallback till the 127.97 channel top. Closing above 135.19, not expected today, but may well play out later in the week, should then set off secondary buying to the 143.11 level, which is about here on this chart, within several more days. 143.11, once again the start of a wide zone of meaningful longer-term resistance up to 148.60 that can absorb buying for the month, possibly into later Q1, and a significant upside continuation point into later Q1 if settled above. I think that kind of covers the upside. Now, if we do today break back below 127.97, certainly if we open below 127.97, we can within the day fall back to the long-term support area that on the daily chart remains in the 122.86 to 123.92 region. Now, if there's a big sell-off today, and if we close below 122.86 today, Monday, we may, let's take a look at that chart to see how realistic it is. And I'm going to say, sure, if we close today below 122.86, the 115.53 channel bottom, which is projected off the August high, so it's about a 5-month channel bottom, in reach within the week over the next 3 to 5 days, if we close today below 122.86. 115.53, a 3-star weekly support level. In other words, able to contain weekly selling pressures. But as I said at the top of the video, if we settle the week out below this 121.20 to 122.67 region on the weekly chart, we maintain, I was going to say enter another sell signal, and that would be true. But this August sell-off, post-August sell-off, would remain intact. And it would continue wreaking havoc on Apple price activity. I would expect, I'm going to say at the very least, 102.73 over the following 2 months. And certainly as we play out into later 23, I personally wouldn't be surprised to see what I call a full channel extension, which is a pretty decent targeting mechanism I've used for many years, and it works pretty well. Does it mean we'd be destined for 73.65? No. But if you're a long-term player in Apple, if you're an aggressive, savvy options trader, if we close below 121.20, not only should you scout out those 102, 103 out of the money puts that don't expire for at least, I'd say, 3 months, but you may consider going out, I don't know, a full year into the low 70s out of the money puts. I say a full year, not because I think it would take that long, but you don't want to go 6 months out. It could take 6 months, and during that time, your delta value would decay as theta rears its ugly head. Your time decay element would decay the premium on those out of the money puts, and despite the fact you may be right on the move, you may see nothing in return. So I would go a full year out on a 70, 72 out of the money put if and only if we settled the week Friday below 121.20. Until then, that's bottom picking territory, and we should, as I say, by the end of February or sooner, reach into the 140s. And that is all I have for this particular Wicked Stocks Apple daily Apple report for Monday. I'll be back tomorrow with Tuesdays.